Good day, everyone. Good day, everyone. Hope you guys are having a great day. New York session started, and we're buying US 30, taking US 30 all the way up, buying US 30. CPI was very positive, um, and you will see that whenever there is positive news, we know what to do with the market. So basically, what happened was there was a liquidity sweep, and since that liquidity sweep activated a lot of stop losses here. We also saw that there was a previous break of structure, and that break of structure actually caused this retracement up to here, and we did not see a break anyway here. So then we decided to look for a move at least up here. So we're gonna take out partials as we are moving all the way up. We're gonna take out partials as we're moving up, and that's basically what we're looking at. Nasdaq did not really look at anything yet, but also Nasdaq I've been looking for buys. Remember, Nasdaq is a buy because there is the new Apple iPhone coming out. So remember, the liquidity sweep, beautiful. I'm looking for Nasdaq to go up, but I'm not really 100% sure on Nasdaq. So I need to look at some of the fundamentals, and also some of the economic factors that have to contribute for us to decide on either a buy or a sell on Nasdaq, right? So I'm still looking at economic factors, and if I will be interested in looking for an up movement. But you need to remember that Apple is releasing their phone, so that's a big thing. Scale is a big thing. The fact that Apple is releasing their phone is gonna take Nasdaq to the next level, and that's an obvious fact. Okay, so remember that if it's not today, then it'll be tomorrow. If it's not tomorrow, then it's the next day. But one way or another, there is going to be a big upward movement in Nasdaq. Okay, so if you're trading, make sure that you are looking at Nasdaq, that you're observing Nasdaq, and that you are actually bullish on Nasdaq for this short period of time. Okay, so for you guys that have been trading for some time, you'll have to understand that market is moved by economics. Okay, economics moves the market. Economic factors play a big role in market direction, and if we do not know economics, microeconomics and macroeconomics, then there's gonna be a lot of uncertainty we're gonna experience in the market. Now, there's so many people that actually think that they need to study things like candlestick patterns, but in actual facts, candlestick patterns don't even mean anything at all. Like, no one cares about candlestick patterns. Okay, majority of of the moves, major moves that happen in the market are based on economics, performance of that specific economy, performance of a specific stock, performance of a specific share, or the performance of a specific asset. Let me place it like that. Okay, so if you do not understand the performance of that specific instrument that you are trading, if you don't understand the things that move that instrument, what factors. So let's say that you are into forex trading on its own, and you're looking at forex trading. All right. um okay, Nasdaq, I believe we have to look for a little bit of buys to take it at least up to here, and maybe let's see if we can reach up to this region right there, because I have a strong view, because we see this change of character right here, and then we see this BIOS, and then we see price tracing up to here. We did not really touch this POI, point of interest. So I'm looking if we will be able to come up to this point of interest, but then at this exact point, we even saw price showing us that delivery has changed and price grabbed in this area. So let's see if price can hold above the regions of 15352, 15352. If price can hold above those regions, then we will be very excited to go above. But it also goes hand in hand with management, trade management, how you're managing your trade, and all that beautiful stuff. Okay, so as I've seen this grab, liquidity grab, I would think a lot like, why would price want to go back to where they have trapped traders? Okay, so that's also like in my thought patterns as I'm looking at the economy, as I'm looking at economic factors, and also timing. Also timing also plays a big role when I'm trading. Okay, timing plays a big role when I'm actually trading. All right, and you see, so these 3 or 4 things are actually very important when you're trading. Okay, it is time, it is um actually it is actually economic conditions, and if it is things like Nasdaq, S&P 500, or US 30 that you're trading, then it's actually stock performance. Okay, that plays a big role. You need to know the stock performance, and then timing. Okay, and management, risk management. So those are things that you need to align as a trader to, because stock performance is like forecast of where the market will be going long term. Okay, now that gives more certainty of you knowing where price will go, because you just looking at the chart like this and thinking that it's gonna rise, gonna fall, is gonna be more stressful. Okay, right? And also you knowing where the price is gonna go over time, and not only like that, the fact that you know where it's going over time, the fact that you do not know when it's gonna go that direction. So you knowing when is actually now contributed by timing, and also fun technicals, you understanding the technicals. Okay, the technical framework behind um the market, right? So you need to understand the technical framework. Okay, which is now understanding not candlesticks, where order flow is, um order flow, supply and demand, um you know structure of the market. And then once you have that into your you know if you have that available to you, then that's where actually your risk comes in, your risk appetite, how much you're willing to risk on that specific trade. And basically what you risk depends on your confidence, how confident you are in that specific trade setup you find. Is it a setup, or B setup, or C setup? I have basically seen many people risking a lot of money on C setups, and then when the A setup presents itself, then the account is already blown, or margin is already out. Okay, management informs of people do not know when to move their stop losses. Some of them move the stop losses too early. You don't have a breathing system, meaning that how much percent do you want your trade to move first before you can basically start moving your stop loss to a specific point. That's what I mean. What I mean by moving your stop loss to a specific point. So let's say that we bought US 30 right here. Okay, we bought US 30 right here, and the reason why we use that entry was probably this order block. Not the order block, the zone. Okay, So let's say we bought USDT at the zone, and this was our buy entry. Okay, this was our buy entry, and let's say that we have $100,000, or let's say a $10,000 account, okay, which is easier for funding. So let's say that you have a funded account or a normal account that's yours, and you have got $10,000 funded, right? So once you have $10,000 funded in your account, you know, okay, I want, this is a 5.97% trade. Okay, that's a potential of this trade. So what is the half of 5? All right, so 5.9, that is almost 6%. So 6% half is 3%. Okay, so now you have to know, okay, 3%, when this trade reads its equilibrium, which is the mid part of the 6%, which is now 3 point something. So once you see the trade reaching that area, then you cannot decide to actually move your stop loss to break even. You get it? That's when you can decide to say, okay, I'm moving my stop loss to break even, meaning from here I'm managing my stop loss. Or let's say once you see it going to 2%, all right, or 1%, once you see your trade is now in profit of 1%, that's actually when you move your stop loss from its original position, then you move it a bit up, all right. And as you see, it's now approaching the 3% area, right? Then you move your stop loss to break even. So meaning that once it's at this 3% area, it also signifies that there is a possible break of structure, a clean break of structure. See that price is broken. Like now, price is not break yet. This is just a wick. So I'm gonna focus and concentrate on the wick and think that the wick is now the one that's gonna show me, oh no, I'm gonna move my stop loss to break even, or some stuff. Like, depends on your rules. Okay, my rules are different from yours. Because you see, many people find the right trades, but actually they are too early, or they are too late, or they don't know. You know, there are just many things that you need to have trial and error to master as a trader, right? Like, you need a lot of trial and error, and that's something you cannot skip. So let's say now we have seen that the trade has actually gone up, and then we see that the trade has made its break of structure, right? Then we can possibly move our stop loss to either break even or the midpoint of this zone. Okay, depend so many ways. So you can see, okay, what's the middle part of this zone from here to here, 50%. You can use the triangle tool or this rectangle, whatever angle it is. You put your stop loss to this point, because the midpoint, when once you see that chain, so that if price bounces back, it won't affect you. Okay, all right. So now let's say that you are now planning on taking this trade up to here and want it to go. It's not all the time that the trade will reach its target. It's not all the time that the trade will eventually go up. Most of the times it goes up. Okay, there's a 70% chance that the price is gonna reach this area. So now there is now 30% chance that it might not. So that 30% chance doesn't mean that it will never. 30% is a large number. So now at the back of my mind, I know that when price comes, I'm gonna preserve my capital by reducing my risk and reducing my stop loss, or I'm gonna preserve my capital by putting my entry at break even, or I'm gonna preserve my profit by locking in. Once I see traders actually went to a certain level of profit, I'm gonna start locking my profits. I'm gonna close some trades. Let's say that you open 10 lots, or you open 5 lots. From those 5 lots, how many lots can you reduce so that you can feel comfortable with holding the trade? Because at the end of the day, it's not about you making money in one day and then feeling like you're a winner and then blowing all that money the next day. The aim is actually so that you can last longer into the game, is that you last longer into the, you know, into the industry. Is so that you can last longer and make money easily. Because if you do not, like, if you cannot last longer, then, like, at the end of the day, you just expire, right? You will expire. And you get tired. Your psychology will be messed up. It will take time to build back your psychology to where it's required. So for us to avoid all that, we need you to trade responsibly. Okay, so the question would be, is it possible that you can make is it possible that you can make 5,000, 6,000, 7,000, 8,000, 10,000, 20,000, 30,000, 40,000, 50,000, 100,000, 200,000, 300,000, 400,000? Like, you can make any amount you want on the market. but the first thing you need to master is that, can you be able to stay in the game? Can you be able to stay in the trade? Can you be able to stay long term and make money? That's the ultimate question you need to answer as a trader. Okay. So we are now also approaching the time is 12 minutes past 3, which means that we are about to enter into it's almost about to be 9:30 in the US. Okay, 9:30 in the United States. Now it's 9 o'clock in the morning, which is the banks have opened already, and it's actually 9 o'clock. So we are going to either see price collapsing. We're gonna see a big spike at 9:30 plus. Okay, because we are trading and we also look at time. Okay, I'm dropping for you guys a lot of gem. So I hope you guys are listening. US Euro USD, I did not really look at it. I did not look at Euro USD. I was not trading Euro USD. Euro USD is, oh, it actually came to the area I was actually looking for. I wanted to see what will happen at this area, but I'm not having any trade open. I was looking for, to be honest, I was looking for buys on Euro USD. I was looking for buys, but I did not make any entry based on some reasons, personal reasons that I was having with the pair. One of the reasons was that on the higher time frame, excuse me if it's lagging a bit from your side, excuse me if it's lagging. Okay, if my connection is a bit unstable from your side, please forgive me for that. Network is really not that great, but I hope it will be stable as time goes. I hope it will be stable. Okay, so Euro USD is actually broke. Euro USD broke actually this structure right here. As we look at it, so as everyone knows, I basically trade Euro USD, GBP USD, Nasdaq, S&P 500, US 30, and sometimes USD JPY. Okay, those are the things, those are the instruments that I look at most of the time. Okay, so but now I have this issue with you with Euro USD. Euro USD broke this low right here, which I like. Okay, it looks beautiful, the fact that it broke. Now since it broke that low, I expect Euro USD to actually go up, right, to make a retracement. So the fact that it's selling, it is a red flag for me. I'm not gonna trade it. It can continue going down. There are so many other pairs that I can look at, you know, to actually buy, actually trade, that are aligned with my strategy and my approach. Okay, yeah, basically. So the only thing that I would look for in Euro USD is actually now buys, because I saw this has been broken, and I need to see the retracement taking place at least up to this supply, or either any of this inefficiency. Okay, any of this inefficiency. A few minutes left for 9:30 US time, and also 3:30 Namibian or Central African time. Okay, so as I was saying about Euro USD. Okay, I don't really have a problem with Euro USD, but I believe that Euro USD should be buying. And if you want to look for setups, the only setups that I would advise you to look for in Euro USD is buys. Okay, like why would you sell? Why would anyone want to sell? So currently I think this is a good area to start buying from, to take it all the way up to somewhere. But lock in your profits as the trade is going in a direction. Don't try to be creative, just lock your trades as you see profit. And if you take a loss, then it was the loss for the day. Okay, actually, so that's how it is. Like, I would not want to go against, structure and against my strategy. So I would basically want to look for a buy, actually buying power, and that's what's happening now. So Euro USD should be a buy right now. So let me see if I can give a signal in the signal group, free signal group. Okay. And I always state, use proper risk management. All right, use proper risk management. Don't over risk just because you see that is the trade, because this might be the trade that you will lose, and then tomorrow's trade might be the trade that will make you a lot of money. Okay, so don't over risk on trade, based on, but hold on before I give the signal. I first want to see how price does it, because there's still 10 more minutes left. There's still 10 more minutes left. Yeah, there's still 10 more minutes left, and I do not see this area be broken. Neither do I see this area be broken. So I would want to see price actually going up, right? And when it's more choppy like this, it's a bit more dangerous to actually make trades, in an in an in an in an environment, right? That is, so many traders would actually look at price like this and also conclude and say this is a break. Okay, for me, I actually look at it differently. I like to see a candle's body closing above an area, meaning, if I'm like you see this here, this break here, this is a proper break for me. Why? Because I see the body of the candle closing above here. That gives me more confidence that this is gonna go up. Okay, but I also know Euro US is gonna go up. Okay, I know that. um I know Euro US is gonna go up. But what makes more sense is to see a strong break, showing that it is broken. Okay, and then something like that. Okay. So when we also look at the higher time frame a little bit, the reason why I was looking for that buy is because the higher time frame, which is the 4 hour, is signifying, showing us that there can be a high chance that we might go a bit up. Not exactly even up to here, maybe just up to here, up to this supply. So there are actually two POIs. You can look, for the people that are in the private membership and the ones that are in the signal groups. I actually specify and I show them, but this is a free group, so I'm just teaching you. I'm using my free time to actually come to you and then show you. So I think there's a lot of gem that I'm actually dropping by actually doing this. Okay, so yeah. So first TP that you can look at is this one. Second TP that you can look at is this one for Euro USD. Okay, Euro USD. What you can also wait for right now is, you can actually, if you are not that strong in psychology, you can wait for this 15-minute to close, and if you see the 15-minute closing is actually positive, then you can start buying. But if you're a risk trader, you can actually make a risk and enter right now and start buying Euro USD. Okay. Okay, so if you're buying Euro USD, You can either choose to wait for the 15-minute candle to close. And there are now two types of stop losses. There is the stop loss that you can use, which is the original stop loss, which I like, which is the 18 pip stop loss, or you can use the stop loss. Okay, so I would prefer the conservative way of looking at the market, because I'm dealing with people. Okay, when I'm trading my own personal money, I know how to put my stop loss. I know how much to risk on the trade, because I'm actually trading for myself. When I'm giving signals, I like to give better stop losses where there will be room for price manipulation, unless I'm making a sharp entry with a limit order, either a buy limit or a sell limit. Then basically I don't really care, because my stop losses are tight. But when I'm making re-entries, then I like to basically put sharper entries, actually larger stop losses, for easy management of the trade. Okay, so easy management of the trade. So this would be the stop loss that I would give. So if you're in the signal group, you will see the stop loss. Okay, so just look at the stop loss in the signal group right now. Okay, and the and TP1 is exactly at over there. TP1 is exactly over there. So I also gave the TP1 in the group. TP1. Okay, TP1. Okay, TP1 given. And then TP2 is exactly right over here. Okay. So far, your USD is in profit, looking beautiful. Take profit. Okay. Yeah, so basically, if you first take profit, you can also use this as your take profit TP1, TP2, and then TP3. TP1 at 1.07654. It's actually better for easy trade management, so that you cannot blame me if the trade is not going well. And then TP2 actually here, and then TP3 right here, for easy trade management when price is doing manipulation and all that stuff. Then you know what to do with it, right? Better management. Okay, so once you see your trade in profit, now you can decide to either leave the risk still, right? Hold the risk so that the trade can be in nice profit. You can reduce the risk whatever way you want to approach it. Okay, but if you're in a profit and then you see a loss, then it means that you're not a good trader. Okay, that basically means you don't know what you're doing in the market. That's what it basically means. Because every good trader must know how to manage his trade. Every good trader must know what to do with it, with the market. Okay, all right, so that is very important, very important, if you want to have a good trading career. Yeah, so basically right now we are actually floating very nice. We are actually going very well. Beautiful money being made right now. The market is looking well. US30 in profit. Nasdaq actually in profit. I told you to buy Nasdaq, right? And I said once it's above here, you're gonna make more money, beautiful money. Okay. Yesterday's was just a retracement, but now you're supposed to see profit. And if you have already entered the trade, make sure you protect yourself. Okay. I like to tell the people that are in the mentorship, I like to tell them that once you are in profit, make sure that you enter the, I like to say that when you enter a trade, don't enter the trade while the trade is going that direction. When you want to make the best entry, enter when you know the trade is going the opposite direction. What do I mean? While the market starts selling, that's the time that I start buying, because I know it's just selling to take out liquidity, and I know it's actually just selling to fool all of the retail traders. Okay, so now even if this trade now starts to fall, I already made the better entry. Plays a big role. So now this is the secret. This is the secret. If I am actually late in the trade, then I must not risk a lot in the entry. You see that? If I'm risking on this specific trade and I'm planning on making money, I must make sure that, okay, am I early? Okay, if I'm early, I'm gonna risk a lot. Am I late? Okay, I'm late, I'm gonna risk less. When I'm entering early, I risk a lot. When I'm entering late, I risk less, because there can be small, conflict in the market, and that small conflict can actually now be the reason why I might be stopped out, or something can just happen. And then if I'm like having a high risk on the trade, then even I might blow my account. Okay, I might blow my account. So for me to avoid all those crazy things happening to me, what do? I know how to risk, and I know when to risk more, I know when to risk less, on specific times of the market. Those are very important things when you're looking at the market. Trust me, you're not going to regret it. You're going to, in fact, it will be a benefit for you as a trader. It'll be a big benefit for you as a trader. Okay, so I like the way that USD is actually going. It looks very beautiful. There is actually a long-term target that I have for USD, that I've spoken with the students. I've actually, on the Discord, on the private Discord, I have already analyzed, and I dropped the analysis of where I'm expecting USD to go long term, and where I'm also expecting Nasdaq to go short term. Okay, so both long term and short term I've already explained and shown. Okay, so one thing you have to see now is, why is price finding it difficult to go beyond this area? Now it's 330, 930, exactly 930. Okay, so you need to see, let's see if there will be a reaction, okay, on price. And you see, the reason also why Nasdaq is actually pulling up like this is also the Citigroup CEO Jane Frester announced that there is going to be a corporate organization on Wednesday, and they are going to remove management layers and accelerate decisions. Okay, that's why we are seeing now USD is actually going spiking up like this. Okay, so Fraser closing in on a third year atop Citigroup in March said that in a release that she firm remains that the report will be going directly to her. So now that they are reshuffling the firm, that also gives a lot of hope and a lot of a lot of excitement for new things to start happening in the company right now. A lot of people are optimistic, a lot of people are looking forward to what's going to happen in the, you see Nasdaq going up. Guys, this is real trading. Okay, this is real trading. You see me telling you what's going to happen in the market live. You see me telling you what's going to happen in the market live, right? This is crazy. So I'm telling you what's happening in live and direct, and still you would not want to be part of the team. That's crazy. That's crazy, man. That's crazy. That's crazy. That's crazy. That's very crazy. That is very crazy. Like that's like insane. So Euro USD beautiful in buys, Nasdaq buys, um US30 buys, and I actually explained to you why US30 is buying, which is very awesome. I like what's happening to US30. Really looking forward to bigger things um regarding the market and regarding banks. Okay, so yeah, I think this was a fruitful trading day, fruitful trading session. So let's see each other tomorrow. Okay, manage your trade well, hold your trades, but manage your trade well, so that if price goes against you, you know what to do. Okay, I'm almost at my take profit target now at US30, so that's where I basically start closing some profits. I start locking in some profits, you know, so that I can, be happy when with whatever outcome there is in price. Okay, whether price is gonna go the opposite direction or whether price is gonna go my direction, I'm just gonna be happy, right? Because I already planned what's happening in the market. I already planned what's happening in the market. Okay, so that's where now your management comes in as a trader. Okay, you must not only have an entry plan, you must have an entry plan and an exit plan, and you must also have a plan to remain and to survive. Okay, there must be a plan to remain and to survive. Very important things that you need to master as a trader. uh, this is happening live and direct. It's happening live and direct. I just told you what's going to happen, and it's happening in live and direct. People don't believe in Sophia Fx, but we are taking over the industry. Clearly we are taking over the industry, whether people like it or not. That's what we are doing. It's our industry. We are taking it over. It's our industry. We are taking it over. It's our industry. We are taking over this industry. Okay, I'm just securing some profit right now as we speak. I'm securing some profit. Okay, so secured some profit. Okay, so for this session, um it was pretty good. Really happy with how the trades went. Really happy. This one is also in profit. So as it's going into profit and as it's going, make sure you move your stop losses early. Protect your trades. We are in profit, obviously. Okay, which is fire, which is fire, which is fire, is fire, is fire. Fire. So We only produce fire obviously at Sophia Fx. We only produce fire. That's the only thing we produce at Sophia Fx. That's what we are all about. That's what we're all about. We are all about fire. We are all about success. We are all about numbers. We're all about results. So guys, hope you have protected your trades. Hope we have protected your profit on US30, on S&P 500, because you know sometimes you have to close up and protect. I have already protected some of my trades. I already even told you I protected some of my trades, and hope you also have a strong psychology. Okay, you need to have a strong psychology when you're approaching this market. The only time that when the price does things like this is because you might be risking more than you can afford. Okay, if you are risking more than you can afford, then these are the type of things that give you a lot of stress, anxiety, and all that stuff. So it's always advisable that you would be trading things that, and you'll be opening positions that you can handle mentally. Okay, it's not about how fast you make money. It's about you making money and you continuing to make money until you get to that financial stage that you want to be at. It's not about you putting all your money and then having anxiety to the top level and then not being able to perform as a trader. Because I've seen many people come and go in this industry. I was also once caught in the web. I was once caught in the trap of traders, whereby I was seeing many profit, whereby I would see many profit, but I would lose that profit again because I was having greed. Every trader goes through this. Every trader, obviously, we are dealing with money. We are dealing with profits. So every trader goes through all the stages. Before you can qualify for the money, you will have to go through all the stages of trading. You will have to go through all the stages of trading. You'll have to go through all the stages. You'll have to be tested, your patience. You'll have to be tested, your management. And there has to be a lot of money that you'll have to lose in this market before you make it. Before you make it, trust me, there's going to be a lot of losses, a lot of money, and you need to understand that it is all part of the game. It's part of the process. It's part of the learning curve. It's a price you must pay. If you want to be great, if you want to make it in this industry, there's a price you must pay. Each and every trader has to pay a price. So don't be hard on yourself. Don't think that you're going to be profitable all the times. Don't think that you're going to make money all the times. Majority of the times you're going to make money. Okay, and then there are going to be times that you lose money. But that doesn't mean you don't know how to trade. It just means that it's the process. Okay. I'm planning on making new videos for you guys to release on the platform, and I'm really excited for what's coming up. So I hope you guys are also excited. I've been planning on making a management video, risk management video, where I'm gonna be teaching how to manage your risk efficiently, and so that you can, at the end of the day, sit with the profit that you're looking for. Okay, there are many ways that you can risk, and there are many ways that you can preserve your capital in order for you to reach that goal and that target that you want to reach. So before I go, let me just give you a plain example. Let's say that you want to reach 1,000 by the end of this week. It can be pounds, it can be in your currency, it can be in US dollars. But let's just say you have $100 account and you want to reach 1,000 as a goal. Now, will it be possible for you to make 1,000? Yes, there is a high chance you can make the 1,000 that you're dreaming of or that you want to make for that week. But the 1,000 is not going to come from one trade alone. Unless you want to risk your whole account and have a 50-50 chance that if you might blow the account or you might make money, that is now you gambling. That's actually not you trading, but you gambling, okay, with the market. So now when you're gambling, you don't care about the outcome. What you really care about is you just making money and you becoming rich quickly. That's a gambler's mindset. Now, I was once a gambler, right, in the market. That's why I'm talking to you about this. So the gambler's mindset is actually dangerous because if it's your last money, it's gonna mess you up psychologically, and it's gonna destroy your trading career, and it will make you live on short-term satisfaction, let me say. Meaning the days that you're very profitable, you make less money. In the days that you are blowing, you lose a lot. That's a gambler's mindset. Okay, unless you have another strategy that goes with it. So let's say that your goal is to make the 1,000 that you want to make in the market. So if you want to make the 1,000 in the market, it's very possible that you can reach your goal. There's a high chance that you can make your 1,000, right? But do you want to make that 1,000 in one trade, or do you want to make the 1,000 long term? You see, which one is better? Making it now or making it long term? Which one is better? Making it long term. Okay, so making it long term makes more sense. Okay, so if making it long term makes more sense, then what I would advise you as a trader is to make your trade and then risk. So on that $100, what I would expect from you as a trader is to basically only risk a percentage that you can recover from easily. Okay, a percentage that you can recover from easily is, example, what is your win rate? How many times do you win? How many times do you lose? Okay, like that's a question you must ask yourself. Only you can answer that question. All right, so how much can you risk? And after risking that money, will the next trade be able to, or will the next 3 trades be able to recover your money? What is your R to R, meaning what is your risk to reward? Okay, how much are you risking and what will be your reward after that risk? Okay, that's now what has to run up in your mind. The next question would be, even if you lose 3 times following each other, would you still have enough to trade with to make money on the next trade to recover back all that money? That is now also part of the RR, risk reward. Okay, now let's say if your risk reward is 1 to 1, that is 50% chance, which means that every time you're losing half, and every time you're winning, you're making half. Now with that strategy, you are not supposed to even risk anything more than 1%, because if you are risking a lot, like, you're going to be very broke. So that strategy works long term because you are basically risking X amount. It's only going to work long term, but it's not going to work short term. But short term, what works is high reward, low risk. That's what will work for you long short term. And also like the short term strategy also works long term, because it's just the same thing. Okay, so what I'm basically saying is, if you can see on my chart, okay, if you can see on my chart, let me show you a basic 1-to-1. Okay, that's a basic 1-to-1, and then you would see another this is now 1-to-5. Okay, and then you would see this one is a 1-to-8. Okay, so now that is now my risk. If I am opening a trade and my stop loss is, so like, you see, this is a 1-to-10, which means on this trade, if you are, example, if you are risking 10%, you're going to get 100% back of your account, which means you're going to double your trade in with this account. Not double trade, double your account. Okay, because your risk reward is, so which means you need to, if you have $100 account, per trade you are risking $10, and then the only way you can blow that account is if you lose 10 times following each other. Like, you like follow continually, you need to like lose 10 times following each other. Every time you open a trade for the next 2 weeks, every trade you are losing. That's the only way you can blow your account. All right, unless you are not opening unnecessary trades, unless you're not doing unnecessary things. I'm talking about basic, you just trading the basic clean market, following your strategy, and the opening when your strategy is showing a way or showing you an entry point. That's the only time you're basically trading and opening on that specific approach. Okay, so let's say that if your risk reward is basically per day is on a normal day is 5% and below, if your risk reward is 5% and below, you are still set to sit with a decent amount at the end of the day. Okay, you are set to sit with a decent amount at the end of the day. Why? Your R to R makes sense. Okay, your R to R makes sense. Your risk reward makes sense. Okay, your R to R makes sense. It makes sense. But if you are having this 1-to-1, you are not supposed to risk a lot. So let's say every time you're trading, you're losing 1%. Every time you're winning, you're making 10% or 5% or sometimes 3%, which is the lowest. Then that makes sense. That makes sense. So even if you lose 5 days, Monday, Tuesday, Wednesday, Thursday, Friday, you lose, and then the next week you win Monday, Tuesday, Wednesday, Thursday, and Friday. Every trade you're making $100, and every trade you're losing $10. If it is now 10% you are risking per trade. Every day you're losing $10. If it's a losing day, every day when you're winning, you're making $100 on a winning day. Okay, I have the strategy. I can give you the strategy. Okay, I have the strategy. I can give you the strategy. But now but maybe you have a strategy for yourself that you believe strongly in, that you think is gonna work for you. I also applaud you for that. So you can use this method on your strategy. Okay, use this method on your strategy. Okay, so regarding US30, I have locked some of the trades, and I've basically even moved my stop loss to break even. So which means I am basically not at any risk right now. Okay, so I'm actually just cruising. I'm in profit account wise, and also risk wise, I'm not in any risk at all. Okay, that's not what's happening in my account. Regarding Euro USD, I think I've been closed out. If I've not been closed out, yeah, Euro USD has been closed out. Yeah, Euro USD has been closed out. That's what's happening with Euro USD, failing to break this area, but all of that chaos. Okay, but let me go back to what I was talking about. Okay, so now every time that I'm making money, every time I'm making dough, every time I'm making cash, all right, every time I'm making cash, I am making $100 per trade, and every time I'm losing $10. Okay, so this $100 account per trade, I'm risking 10%. you see on this trade, on this specific trade, I'm supposed to double the account. I'm supposed to make $100 extra. Okay, if I'm losing, I'm losing. So after 20 trading days, okay, which is basically how much a month has. A month can only provide you 20 trading days, and you are a day trader. So let's say out of 20 days, which is 20 trading days, some days you don't have to trade, but if you're a trader that likes to trade every day, let's say out of those 20 days you were losing and you lost 10, right? 10 days you were losing half of the days. Let's say your strategy is having a 50% win rate. So your win rate is only 50%. Like you cannot go beyond that. Like you have a very bad win rate. Okay, so it's half, which is not even that bad, right? 50%, which means you lost half of, like, you half of the days you have been losing and half of the days you have been winning. So let's say in 10 days you've been winning. So those 10 days that you've been winning, you've making $100. That is 1,000. Now if you minus plus the 10 days you've been losing, that is only 10 days. Okay, so if you see that is $100 you lost, okay, you are still left with 900. You're left with 900. Okay, proper risk management. Because if you can do this on $100 account, I will trust you with a $10,000 account. I will trust you with a $100,000 account. I will trust you with a $200,000 account. I will trust you with a $1 million account. I will not even be worried if I know you have that much money in your trading account, because you are trading systematically. You are trading as a as a hedge fund. You are trading. You don't even need to win every day. So it's not about winning. Okay, it's not about winning at all, but it's about how do you trade as a trader. Okay, but if your focus is all about, oh, I'm gonna win, trust me, you are going to be in the web. You will be under a web. You'll be in the doom cycle. If you read the book of Mark Douglas, you're gonna understand what I mean by the doom. You are going to be under that trading trap. You'll be under a trap all your life. You're just under a trap all your life. You're under a trap. You'll not even realize that your trading is terrible. That's what your management is terrible. That's why you're losing, not because you're not a good trader. Okay, professional traders understand this thing. Professional traders understand that losing is part of the game. Now let's say you don't have capital and you cannot trade because you have less capital. So while you're trading this $100 account, why not get a side job? Why not get a side hustle? If you are going in the morning to work, why not walk, and trade? Why not enter in early London session and hold your trade? Or why not enter in New York session according to your schedule? Right? You can still do both of them. So while you're managing that $100 account and taking it and making per month 900 extra money, that's extra money from your job, you can still be able to make a living out of trading. But many of you have this mindset of, I'm gonna be rich quickly. You can flip accounts when you have money. Most of us that are flipping, like, I know how to flip an account. I can take 100, like now I'm in a challenge of taking $16 to 1 million, right? I'm even behind schedule because when you're trading a small account, it's like it's hefty, right? When trading a small account, I face a lot of challenges even with this account. So now I'm just thinking about a guy that is only having $16 right now. Like, can only afford to make a $100 account or a $16 account, and he's so stressed and he's worried, and he's like, what can I do with this account? But the fact is that you want to make it in this market and you don't know that you have limited resources. The first thing you work on is your skill, and while you're working on your skill, you work on your patience, you work on your character as a trader. And while you're doing that, you have a side job, you have income, because the only way you're going to survive in this market is not if you know the sharp entries or if you have the best entries. No, where you're going to survive in this market and the way you're going to make it in this market is if you know what you're doing in this market. If you know that losing is part of the game, if you know that drawdowns are part of the game. There are months, they're just losing months. There are months you're going to be in a drawdown. Can you handle being in a drawdown for a month? Can you handle being in a drawdown for a week? You'll be losing weeks where every day you just be losing, right? But just because you're losing, it doesn't mean you will blow your account. At the end of the week, even with a $100 account, your $100 account will probably be at $50. Half of the account gone. Then you know, okay, next week I'm gonna refocus. One day, maybe Saturday or Friday, I'm taking off. I'm gonna sit. I'm gonna not look at the market at all. And then Saturday, I'm coming back full force in the market. I'm gonna prepare myself. Monday, I make $100, which means your account balance is at 150. Tuesday, probably you do not find an entry, you close at a break even. Wednesday, you made again another 100, which means your account is at 250 again. Wednesday, you got close at a break even, or maybe you lost $10, which means your account is now at actually 240. Do you see how a real trader's account looks like, how a real trader's mindset is? That is how a real trader's mindset is. So I hope this video was very fruitful for you guys. Hope you guys enjoyed this video. It has to be insightful for you, because you know, these things are very important when you're trading the market and when you're dealing with risk management. Hope you guys have a beautiful day. Peace.